little presentation as well, if that's something I can share, or I'm happy to just kind of talk off the rip as well.
Yes, you can share. I will do that now. So, hi everybody. Good afternoon again, and welcome to our second workshop for today. So, I have here with me Jamal from Polygon, and today we will be learning how to use Polygon on payments. So, I'm excited for this section already. So, yeah, Jamal, over to you. You can share your screen so I can increase that one. Yeah, thank you.
Yeah, absolutely. Let me see if I can share my screen here. Can you see this? Can you see my presentation?
Not yet. Yeah. I can see it now.
Okay, perfect.
So,
Well, before
yes, perfect.
yeah, so before I go into it, I'm happy to give an introduction on who I am, and what I've been up to at Polygon, and before that, and what my background is, and whatnot. And then I put together a very just short presentation on what is the payments team up to at Polygon. So what are we building? What are we working on? What are the partnerships that we're putting into place? And as part of that, what is our strategy as an organization to try to make Polygon the best place to build payments related activity? Um, so a little background on myself. I lead all of our payment strategy across the globe. I am a part of a larger kind of fintech team, but my specific role is kind of navigating and creating our payment strategy as an organization. Polygon POS has been around for a while, but specifically POS, like the main chain product that Polygon has, is going to be focusing entirely on two major use cases. So payments and RWA. So my team, my side of the house, does more what partnerships, what products, what things can we put into place at the chain level to make Polygon the best place to build payments and do payments related use cases. I've been here at Polygon for about 5 months now, so I'm pretty new, but I've been in the crypto payment space for about 9 years overall. Before this, I worked at a fintech PSP slash bank based out of Europe called Unlimit. Unlimit has what's called like principal level Visa and MasterCard acquiring, which means they work really, really closely with Visa and MasterCard to accept cards as a form of payment at probably the deepest level that you can get. So typical customers like this include like Flutterwave, checkout.com, WorldPay, Stripe is another one as well. So basically these like acquiring level principal acquirers and also principal issuers, which means they actually issue cards as well. So I was their head of stablecoins for about a year and a half, leading all their stablecoin related initiatives. Before this, I joined a company as their first employee, a company called Bridge. Bridge was one of the first kind of stablecoin startups out there. They built a lot of the first early kind of stablecoin payment orchestration applications, was heavily popular in Africa, worked with a ton of the largest kind of African payment companies. And yeah, we built a simple stablecoin API platform that allowed developers to build around stablecoins in the US, get access to bank accounts, get access to USDC and other stablecoins, and build that into their application directly using an API. So I was there as their first employee. I stayed all the way past the Series A that we raised, and then onwards to the acquisition with Stripe. Before that, I led global BD for a company called Wire, which was the first fiat on-ramp ever. They started in 2012. They built out basically the first crypto payments infrastructure that you saw as a platform. They worked with a lot of major customers like MetaMask, and the U.S. federal government even used them to do aid disbursements in crypto. I was their head of BD for about 4 years. Did a lot of their stuff like building out a lot of the organization, getting a lot of their earlier customers, setting up a lot of the product level partnership strategies, and kind of working with the upstream partners to enable payments on the blockchain, whatever. Um, Before that, I was leading debit card partnerships at Cash App, which is a very popular app for money transfer here in the U.S. I led specifically the debit card on and off ramps. So using your debit card as a way to fund your Cash App account, or using your debit card as a payout mechanism to get money off of Cash App. I did work a little bit on their crypto treasury product, which is just a simple, buy and sell Bitcoin. Before that, I was there for about a year. Before that, I was the head of ED at a company called BitPay, which is kind of one of the earliest pay with crypto solutions. They work with some of the largest enterprises in the U.S. to enable people to buy and sell their crypto directly in a wallet, and then use that wallet directly at a merchant to be able to buy something. So if you want to buy a pair of shoes online and you want to use crypto, BitPay would process that payment for that merchant, settle the merchant in cash, and handle all the crypto stuff. So anyway, I've been around payments in crypto for a while, specifically using crypto as a payment method. A lot of that traction has been globally. So a lot of use cases around using crypto across borders, using crypto in underserved areas, like let's say Africa or Latin America or even parts of Southeast Asia, and how crypto has become a better payment mechanism than some of the existing payment mechanisms out there. But yeah, been around crypto and payments for a while. I'm glad to see that stable coins are getting as much attention as they are now. Stable coins are definitely kind of the top of the narrative, and a lot of people are thinking whether they should launch their own stable coins, whether they should utilize stable coins in their applications a little bit more. The government is getting a lot more friendly to stable coins, so it's just great to see that a lot more stuff is happening on that side of the house. Just to go through this presentation really quickly, um, I'll start by kind of talking about what, like, the high level on Polygon. A lot of people know us just because we've been around for a while, but just to give you kind of a reintroduction of who Polygon really is and what we think our strengths are. From that, I can talk a little bit about how we deal with payments enterprises, and then in those payments enterprises, what are the typical use cases that they look at, and how do they tailor, or how do they tier those use cases out and prioritize certain things over the other, and what their roadmap looks like as they implement that. Number one. Number two is going to be the market data. So from that, you're going to see a little bit more data about what we're seeing with stable coins, the traction that we're seeing, the transfer volumes, and what else. Stuff that's going to be really relevant for, just sizing up whether the market opportunity is huge or not. Then we can talk about specifically those use cases that these enterprises adopt. So typically we see starting out with stablecoin payments, using stablecoins as simply like a payout or payment method across borders. And then phase two is usually adding some sort of embedded wallet function so that they can enable stablecoin payouts directly on some sort of application. So like this could be, a company integrating wallets directly into their application so that they can use stablecoins directly in the app, as opposed to just enabling stablecoins to take money off the application. And then the last part is we talk about, I think Solana is the one that we see the most in the market. They're probably the most active when it comes to all the other chains out there in the payment space. They have a payments dedicated team. They're really, really, motivated to work with payments partners and make things happen. So we can do a little bit of an analysis between the two of them and talk about what makes Polygon a strong competitor to Solana, and where Solana kind of, for lack of a better term, lacks in certain areas when it comes to the payment stack. So Polygon as a high level, I mean, pretty much it's our technology and our distribution that gives us our reputation. Obviously, we've raised a tremendous amount of capital from some very reputable folks. So we raised just about a $500 million from names like Sequoia, Apollo, and SoftBank, which are best in class firms on a global level. We raised from traditional VCs as opposed to crypto VCs because we thought, this crypto mission was a little bit more of a fintech or global broad finance mission as opposed to a crypto specific mission that we were doing. On the technology side, I think we really specialize in like making Polygon one of the best places to perform stablecoin and other payments related transactions. So when it comes to like an efficiency and a scalability perspective, we have just around, I think, 1,500 to 2,000 TPS today. We're looking to get that over to 5,500 TPS by the middle of probably the end of the year, I would say, but at the latest, kind of the middle of next year. And that would give us what we think is significant scale to the point where I think that is more than enough room for us to work with for quite some time. For context, Visa is doing just around 1,200 transactions per second today. So we think that that 5,500 is more than ample to be able to service any use cases that we have. In addition to that, we see a lot of just transaction volume, both on just like healthy vanilla P2P volume, but also a lot of stablecoin activity as well. So we are the number one chain for monthly active users when it comes to USDC, which is the most popular chain that we're seeing on the US or the US side, and also kind of the dominant player when it comes to payments related trading or payments related use cases. We are the third largest chain when it comes to USDT, but obviously Tron and Ethereum have really, really good footholds on those side of the house. But we are better than, let's say like Solana, Avalanche, and some of the other larger players out there. We see a ton of transfer volume and transactions when it comes to both P2P and stablecoin. So we see just around $150 billion in monthly stablecoin volume, and that's on, let's say, like 400 or 500 billion total per month, which means we're doing a sizable amount of our total volume in stablecoins, which just shows you how focused we are on both payments volume and stablecoin volume as a whole. And then we do around 5.5 billion in transactions per year, which shows the kind of scale that we can get to. Actually, I'm sorry, this is per month. Per month. In addition to our technology, our distribution is some of the best that we've seen. We started the company back in 2018 to just be an early scaling solution for Ethereum. And obviously, with the fundraising that we received back then, we were able to kind of deploy that capital and get distribution with really good enterprises. So on the enterprise level, Polygon has some of the best relationships with some of the largest players, and we use those relationships to build some of the best in class solutions across the world. So we do have relationships with some of the strongest players in the US, like Visa and MasterCard, Stripe and Bridge, Robinhood, as well as Reddit, Starbucks, and SAP, which I know SAP is a global company, but is very strong foothold in the US as well. JP Morgan, primarily based in the US, BlackRock as well. In addition to that, we have a really good presence in LATAM. So you can see Mercado Bitcoin, you can see, let's see, Bitso, Nubank, Lemon Cash. These are all strong players in the LATAM area, specifically around fintech, some around crypto as well. And it just goes to show that we have good distribution on the boots on the ground level when it comes to Latin America. In Africa, we work with Flutterwave, Fincra, Yellow Card as well, and we're trying to invest really heavily into the region to make sure that we can get more partnerships, work with more payment providers, and see a lot more payments related activity come out in that area. In addition to that, just some like major players like Revolut in Europe. Geo is the largest browser that is in India. And then Flipkart, the largest e-commerce company in India. SAP is actually a European company, a German company. WorldPay, a European company, a UK-based company. So we just have really good distribution at the enterprise level. These are all serious names with really good user bases or volumes or distributions or whatever. And that just shows that when they partner up with someone like Polygon to enable their blockchain rails, they have like the real scale to be able to reach like millions and millions of users and build something that really has impact in the space. Ultimately, the main reason why we kind of see that distribution is the Ethereum ecosystem is one of the best, kind of most robust ecosystems out there. And the strongest kind of value proposition that Polygon has is that we are an Ethereum based blockchain. So when it comes against like, let's say Solana or even alternative blockchains where things are all like optimized for money, like new alternative layer ones that are coming out there, what tons and tons of enterprises know, love, and trust is the Ethereum scalability, which means being Ethereum based and being EVM compatible is a huge point to a lot of these enterprises. And that makes it a big difference for them when they're selecting who they want to invest in and what they want to build in. As you know, when it comes to building in Solidity and building when it comes to the Ethereum blockchain, there's a lot more composability. There's a lot more confidence that that that's going to get widely adopted when it comes to the community or the implementation into the ecosystem. But however, that's not necessarily true when it comes to when you're doing like a layer one specific language, like maybe like with Rust and Solana or some of the other chains that you see out there. When it comes to the payments world, compliance, reliability is incredibly, incredibly important. So with us, a huge point that really really matters with our enterprises is that we have really good uptime, that we are very reliable. A great example is, and this is just another key value proposition to the Ethereum community. But one thing that we reference a lot is that in January of this year, Solana launched Trump's meme coin, which got a lot of attention, a lot of traction, as meme coins typically do. And we'll admit that we aren't the most, the best chain when it comes to meme coin distribution, which is fine because that's I think what we want to leave to other players. But the chain went down. Solana went down in January because there's just too much activity, and it just shows that they're not scalable, right? Like that if they saw excuse me, if they saw real traction with real users doing meaningful payments, they would have too many bottlenecks to be able to support that volume at scale, which is obviously really important when you're talking to Visa, whose like primary directive is that we cannot go down as an organization. It is impossible for them to even understand what it would be like to go down. They have so many safeguards in place to make sure that they don't ever go down, which is critically important because your cards need to work when you're making a payment. Sometimes those payments can be at critical moments, and Visa has a directive to make sure that those transactions approve within 5 minutes. So typically with these enterprises, what we typically see, most people want to start with just simple stablecoin payouts. Most of them want to just understand, what does it look like for me to add stablecoins as a payment option for my merchants, for my customers, for whatever. That sometimes can look like pay-ins, which means like accepting stablecoins as a form of payment. But where we see way more traction today is in marketplaces, in other situations like that, where the company has to make a payout to a recipient. So this could be like it could be like a gambling marketplace. It could be like like a marketplace for casinos and for gambling. It could even be Airbnb. It could be anything. So like eBay, Uber, Etsy, Airbnb, as well as any of these other marketplaces that you see have a strong kind of like pain point when it comes to paying out their merchants and their customers globally. They just may not have the local payment methods in places like Africa or Latin America or even Southeast Asia because these are predominantly US companies. So they have really good US rails, but really poor rails outside of that. And that's where stablecoins as a payout option become very valuable because their customers can simply receive stablecoins wherever they are in the world. And it is highly optimized. It's highly cost effective. It's a stable asset, so there's not like volatility pegged to it. And a lot of these people want stablecoins more than anything else. So yeah, stablecoin payouts is usually a natural place that we start. Most of these enterprises just want to offer their customers a stablecoin payout option in addition to every other option. And the primary driver is they want to service their customers better. It's not really like, oh wow, this is cheaper or wow, this is faster. It's really that this is all about the customer. The customer wants stablecoins, and because of that, they're going to get stablecoins a little bit better. So cost reduction, speed, reliability, whatever, these are all nice to haves. They definitely care about them. But the thing that they are doing this for more often than not is that they want to serve the customer better, or they want to be able to get the customer better. That customer is not really doing much with the enterprise because they're in a jurisdiction that they can't target very well. So now if they start getting stable coins, maybe they'll start doing more with the enterprise, maybe start hosting or renting more on Airbnb. Maybe they'll start utilizing these marketplaces more and more, whatever it is. Phase two then moves to using embedded wallets. So adding wallets directly into the application. So like I'll just use Airbnb for an example, just because it's a good example of a marketplace and a good example of a company that's like very tech forward that would look at this type of stuff. But stage one or phase one for Airbnb would be just to simply allow people hosting on the website to be able to receive a payout in stablecoins when they put their home up for rental. Phase two would be adding embedded accounts or wallets essentially into the Airbnb platform so that those hosts can receive their payout directly on the platform and utilize it for a payment on the app or keep it there or do something with it. Phase three is how do you make those assets on that wallet more sticky and more useful? So that's like enabling people to spend their assets on the app, enabling people to earn rewards on that app. So maybe you earn rewards for loyalty, maybe you earn rewards for yield, maybe you just have a balance and it's stable coins. And because of that, you can earn a healthy yield on it. That will keep you on the platform and keep your assets very sticky. Then from there, I think we kind of speculate towards the future quite a bit. And obviously, these enterprises, they want us to give them some strategy. They want us to give them an understanding of what they should be working on. I think it's still very early to see what these enterprises will do. But typically, something we talk about is maybe we'll launch a card or we'll do other sort of direct spending integrations just to make it much more useful for people to have their stablecoins. So phase one is getting people stablecoins. Phase two is giving people a place to hold stablecoins. Phase three is giving them reasons to keep those stablecoins. Phase four is giving them a reason to spend their stablecoins or make their stablecoins much more useful. And that involves like getting a card that they can spend with their stablecoins or doing direct integrations to pay their bills or their house or their whatever with stablecoins, making them far more useful. Phase five is expand into other crypto assets. So that would be non-stable coins, and that could go a variety of ways. It could be tokenized RWAs. It could be like tokenized financial products, like tokenized money market funds from the US. It could be Bitcoin. It could be Ethereum. It could be other assets. It could be yield that's generated on chain. It could be borrowing. It could be lending. It could be a variety of things. But basically, just adding more crypto services, given that they have the blockchain plumbing set up, but don't have other use cases kind of built out yet. And then phase six is we always say that, like, it's always a good thought to see what it would be like for you guys to launch your own stablecoin. I'm not necessarily saying that you should, because I don't think every enterprise should, but there are a lot of enterprises that should launch a stablecoin. And what would it look like for them? And what would be the reason to do that? And exploring the reason for that is usually phase six. And then the last phase, phase seven, and again, this is looking significantly out, maybe multiple years out later. But the enterprise could typically look at launching a layer two. And Polygon obviously has a solution for each one of these phases and what that enterprise wants to do. But that enterprise at the last mile could look at launching their own network and using their network for their customers to be able to enable transactions. And that could be using their stablecoin and their solution with their tokens and their different products and different services. And that could lead to a holistic crypto ecosystem that's built entirely on the enterprise. I'll probably fast forward through this. I think you guys are all pretty familiar that stablecoins are hot. There is a ton of stablecoin traction happening in the space today. Cross-border payments is predominantly where we're seeing the most amount of traction, as well as some other use cases as well. But you're seeing that there's a massive uptick in in stablecoin adoption, especially in underserved markets like Latin America and Africa. We're just seeing a lot of this like traditional vanilla usage, which is like a usage based on utility. I want to pay my friend. I want to pay a bill. I want to pay a supplier across borders. I want to send money to family overseas, which are like the right use cases for utility and the actual adoption for stablecoin, as opposed to like, I want to lend out stablecoins and borrow against it or something else or crazy, which is useful and a good use case, but not where, people are utilizing it for the day to day. And that's where I think we're starting to see some really good traction. So just to quickly highlight kind of the first use case that most people say or most people want to build with is just stablecoin payouts. So again, Airbnb is a really good example. Airbnb can enable stablecoin payments as a payout mechanism for their hosts. You could be hosting in Africa, you could be hosting in Latin America and Southeast Asia, in the US, in Europe, wherever, and you could choose stablecoins as a payment option. You could choose dollars, you could choose what other currency, etc. And then you can choose stablecoins. And in those situations, stable coins are better from an FX perspective when it comes to certain geographies. And certain customers, as I mentioned earlier, prefer stable coins or simply can't use anything else but stable coins. And those customers have a better customer experience when using stable coins on these platforms. Obviously, there's a lot of cost benefits, economic benefits around not saving or saving money on the interchange and the transaction fees. These payments are extremely fast. They work really effectively. They're super efficient, and they usually don't have reversals, right? So a big problem in the States, in Africa, in Latin America, whatever, is that these card transactions can be reversed, and there's a massive amount of fraud that needs to be dealt with. The nice part is that it's like instantaneous, even on the weekends and holidays. So when it comes to things like the weekends, when people need instant access to liquidity, typically people pay an extra fee to do that. But now with stablecoins, they can be delivered on the weekends overnight instantaneously that allows like a very efficient instant settlement mechanism that doesn't have any additional fees. It just is natively integrated. And then obviously they're both corporate and retail friendly. I think long term, we don't really see these benefits right now, but long term, I think you'll be able to see two really interesting points. Number one, blockchain transactions do provide more user behavior over user spending habits. So if I am like, let's say, I don't know, like a store in the US and I use stablecoins as a way to pay out, let's say some people who transact on my store, I can then follow those stablecoins back, or sorry, follow those stablecoins forward and be able to see what my users are doing with those stablecoins. Or maybe I'm a wallet application or a fintech application, and I want to see where are my users actually spending their money or interacting with different merchants and whatever. So what I can do is I can follow those stablecoins through their journey on the blockchain and see where the user ends up ultimately spending it, what they end up doing with it. Do they hold it? Do they hold it for 6 months and then spend it? Do they hold it for 6 hours and then spend it? So that user behavior will become very valuable in making sure that you can market and segment and target the users a little bit better as well. In addition to that, I think the programmability of stablecoins will also start to become more valuable. Right now, people are just doing stuff on the application layer. I think people will start to do stuff far more on the smart contract and the asset level. And in that situation, you'll be able to just have much more intelligent money that can do things. And this is where AI can get really useful as well. So we are piloting a number of these programmatic use cases when it comes to AI and AI related commerce. So how do you enable an AI agent of yours to receive stablecoins? Now the stablecoins are a lot more intelligent than traditional cash could be. And now that agent can do transactions on your behalf and simplify your life and make your life better. Another kind of like terminology that we hear all the time is the stablecoin sandwich. So this is still in the same kind of use case, but ultimately it is a transaction that's deployed a little bit differently. So here you have like a company, let's say in the US, in this particular example, though it could be in any country, you have a typical banking stack, like your local banking stack. You use that to acquire USDC. You hold that USDC in a wallet, and then you just simply move it to another country. And that could be your own company, it could be a different company, it could be like an individual, it could be any recipient, but you move it to a different country. The connective tissue, the interoperability layer in between is Polygon. So once it's in USDC or another stable coin, you send it on the Polygon network. It arrives in as little as 1 second. It's nearly free. It goes to a different wallet, and that goes to a different off-ramp provider. And then that off-ramp provider helps you off-ramp it locally. And arguably, it should be, in certain situations, cheaper and faster than a bank wire. So using this kind of stablecoin sandwich, like there's an on-ramp on the left side, there's an off-ramp on the right side, and the stablecoin is in between. And this is used for cross-border money movement and global wire transfer, or global as a replacement to global wire transfers. And you can see Polygon has a really good network of distribution of both ramp providers, payment partners, and whatever. And with that, we are able to help people like on ramp from various companies and stablecoins, send them across borders to different partners, and then off ramp in those countries to try to be competitive with traditional wire transfers. So how is that built? Typically, we recommend that people partner directly with the stablecoin issuer, so working with a Circle or Paxos or a Tether, and then they partner with a wallet provider to do native native money movement on the chain themselves. And it's obviously better if they connect directly with the chain. Just they're going to have better UX control. They'll have better economics. They'll be more flexible. The coverage will be a lot more global. Their build will be a lot more robust. And because of that, they'll be able to scale into the solution quite a bit better. But it does require a little bit more building than other builds because you are doing things a little bit more natively, a little bit deeper down the stack, as opposed to using a provider that can make it super turnkey for you, which is where the second build comes in. The second build is working with a provider like Bridge, BVNK, Conduit, Noah, which are the typical providers that we see, and using them as a way to kind of just make it super simple. It obviously makes the go-to-market much faster and simpler. You're just integrating to a simple API. That API is pre-built. It's not built from the ground up around your stuff. So obviously the maintenance, the simplicity, the go-to-market is much more optimal because of that. However, you are dependent and you're limited, and that limitation can lead to more friction and more difficulty when it comes to actually building out products and services. So most people, if anything, they usually start with this and they graduate up to a more native build later on. Phase two is embedded wallets, and that's just adding wallets directly into the platform. And here you see, obviously, the UX is the primary goal, making sure that the stable coins are landing in a way that makes it super convenient, it's super easy, and then it also creates user stickiness. So it allows users to do more with their platform or with their assets on the platform, and then get more rewards for keeping assets on the platform directly in the form of yield or loyalty or something over that. Developers and enterprises like this. So, here you can see there's a ton of traction for companies like Airbnb, where you see there's a ton of like assets that can be held on the platform, and those assets can be monetized in a variety of ways. So there's a lot more complexity than when it comes to building this type of stuff and requirements. But usually, if you're building stuff in house, there's a lot more flexibility, scalability, and things that you can do with that. And then here, the last kind of thing that I'll talk about is what makes Polygon special typically to other payments related chains. So the largest competitor that we see in the market is Solana. They're the only other chain that's really heavily focused on payments like us. Arbitrum, Optimism, Base come up, but none of them have any payment specific focus. They're more general purpose chains. So because of that, people don't really go deep into them when it comes to a payment service. So here are some kind of like main competitive points. As we mentioned earlier, the reliability is the biggest one. So when it comes to like not going down, when it comes to uptime, when it comes to the logic and the composability of some of that infrastructure on the chain, Polygon's one of the best. Like if not 100% uptime, mostly always uptime. Solana has multiple outages and whatever. Transactions, aside from that, transactions are cheap. They are fast. And they are, they're quick confirmations, and there's quick finality, which is like the key building blocks that you need for payments. So I will give Solana that. They do have quick finality. They do have quick or low costs. But however, that doesn't scale up that quickly, right? So if you start doing thousands and thousands of transactions per second, then you'll notice that finality will kind of lag, because again, they don't operate on the EVM ecosystem, which builds a lot more scalability and is a little bit more robust. Engineering and other distribution aspects are also much easier on the Ethereum ecosystem, since most people end up building on Ethereum as opposed to Solana, and that logic is quite a bit more composable across different dApps and apps and whatever. But yeah, like obviously Solana is still a formidable chain. They still have really great technology. We just think that technology, when it stacks up against Polygon, is not quite as useful for payments. It might be more useful for things like NFTs. It might be more useful for things like meme coin trading, which is fine. I think we recognize that we aren't strong leaders in that space, and we've just doubled down entirely on payments and RWA. And you will see a lot more products and services built at the chain level to make that a reality. And that's it. Here is the entire payments team's contact information. So there's me, there's Sam, who's our director, and then there's Aishwarya, who's the head of our liquidity. Get in touch with any of us if you're curious to learn more or want to just like talk more about building on Polygon and seeing what it would be like to do stuff more in the Polygon ecosystem. I'll leave some time for questions if we have some time. But yeah, let me know if that was helpful and if that made sense.
Hi, Jamal. Can you hear me?
Yep, I can hear you.
Can you hear me?
I can hear you. Yes.
Okay. So that's a wonderful, that's a wonderful section. Thank you so much. I've been hearing about stablecoin. I've been looking into how it works and stuff like that. And going through this section is just mind blowing, and it's opening my eyes to see a lot of things. And also, let me just ask people in the comments if there's any question, guys. Just bring it up. We have Jamal here for us today to answer our question. So please, if there's any question, let me have it so I can ask on your behalf. Okay. Someone here say a great class. So yeah, the class is great actually. So helpful, yeah, it is. Can I get some Polygon? I don't know about that. I have to ask Jamal. So,
Uh,
so any
you totally
question?
can. You totally can. You just have to go to an exchange and buy it. That's it.
Okay, that's nice. Okay, so what will happen is that some people might not be here to drop the question now. So sometimes we take the question from the group, we send it across to the mentor, and they answer it. We get it back to the group. Or sometimes we can just have like a kind of in-house question and answer section, and also yeah, we always do that. So thank you so much. Thank you so much for the class. It's so awesome, and it's really nice having you. Thank you so much, Jamal. So yeah, I
Thank
don't
you
know.
for
Maybe you
having me.
can. Is it possible for us to share the link to your slides? Probably we want to go back
Yeah,
to it. Awesome, awesome. So I will get across to you
absolutely.
after the class. Thank you
Yeah,
so much.
I'll send them to you via email. Feel free to distribute them. My email is on
Oh,
the last slide of that, so feel free to get in touch with any questions. We'd love to just
okay.
talk stablecoins because we're huge fans and we're huge stablecoin nerds. So get in touch and let's have a conversation about it.
Yeah, yeah, awesome. Thank you so much. Thank you for your time.
Thanks
Okay,
for having me. Yeah,
handle, maybe your Twitter handle, if it's something you can help with, but I don't know, maybe it's at the end of your slide. So, okay, it's there. So, guys, we are gonna send the link, and you can have access to asking questions, and yeah, let's do a lot. Let's build. Let's keep building. Okay,
let's
so thank you,
build.
Jama, for the class. Yeah. Okay, so bye from here.
Thank you. I appreciate
Yeah.
it. Have a good day. Thank you,
Yeah.
guys.
And you too.